Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Thursday. I am a little bit behind, aren't I? So we got in about, so let's not go to the charts. Let's just stick around over here for a second. We have U.S. initial jobless claims, expectation 265. So let's let that come through first. Huh. Okay. Liquidity is all pulling here. Again, the expectation is 265. Okay, there's a little bit of a sell. It must be slightly lower than anticipated. Okay, there's GDP is 2%. Okay. Well, interesting. Okay, yeah, that's bearish. Okay, so 239 versus 265. That's bearish for treasuries for sure. In fact, that drops us to the weekly lows. Okay. So I was not willing to cross the gap there, but I did put some orders out. Just didn't work out. That's okay. Wouldn't expect anybody that would have hit me there would have been crazy. But, you know, every once in a while an algorithm will do it. Well, so they're not even coming back to three. So when I was kind of like putting orders out, I was like 3770, 3775. I suppose I could have crossed at 378 and it'd be okay. But like, look, the spread is still pretty wild there. see. It's not gonna kill me there. And up here, it's coming back a little bit. So they touched 16. So now we're getting to like some of last week's levels that we were talking about. $16 is kind of a support area. Oh man, if so I think there's a good chance that we bounce here. If they were to rush through 16.5, then that would really be bad, right? Let's not say bad, but that would be pretty ugly for treasuries, right? Now, on the split side here, despite the interest rate rising fairly aggressively here, the equity market doesn't seem too bothered by it yet, and the dollar is just soaring. The dollar is just soaring here. There's 3.8. This kind of sucks that this is a kind of a move where, because of the liquidity and the spread, it's kind of hard for me to participate. I guess some retail traders did take the risk there though. Well, okay, so now you actually are seeing some trade on the tape. Okay, so they did push through 16 briefly. I'd say there's still decent amounts of liquidity below us. Like, look at that. 59, 88, 65, 39 at 15.5. That's decent amounts of volume that they bounced into. And of course, back to 17.5. The concern I have here is this could fly back up. If I were to buy, for instance, 3.8, I think the chances of it flying back in my face 10, 20 ticks is pretty high. So, not that I want to go short. I suppose I could go short here, but the risk if we do fail that is even worse, because that could be like 50 ticks, right? So it's probably best for me to just kind of sit on my hands here. Let's come over to Twitter. Binance crypto custody license application denied by German regulator. Forex Live's comment here is so much for that recession. Hey, it could happen quarter 3, quarter 4. It could still happen, guys. This is the beginning of a new quarter. Forex Live notes big revisions to net trade appear to be the culprit for the surprise revision higher in quarter 1 GDP. Oh, that could maybe also explain the impressive strength in the dollar. This kind of puts us in a precarious situation, guys, because so the end of the month flows that we're likely to see today and tomorrow, in the treasuries at least, are likely to be buy and likely to be sell in the equities market. Another thing is that we have been seeing Chinese banks buying yuan, essentially. So selling dollars, buying yuan. And we also saw some odd behavior in the Japanese yen overnight. So let's, I didn't go through the charts. Let's do that here real quick. So I just want to show you here in the Japanese yen overnight. There was this spike, and there wasn't like any kind of news headline with it, but there's kind of this whole thing like maybe the Japanese are out there doing currency operations again, right? So that's what I'm talking about with that. Come over here to ZN. You can see ZN reaching new weekly lows. Not quite to the lows from the 14th, but that's only a hop and a skip away, right? S&P 500, a little bit up overnight. They are starting to turn down, 44.28 at the moment. Oil jumped quite, it was a really big jump after the oil numbers. I don't know why I missed that when we were watching it, but somebody else pointed it out on Discord afterwards. And I was like, oh man, that did really move. Natural gas has been on a tear lately too. Gold and silver are just getting slaughtered. I mean, earlier in the year we were at like 1800, right? So I don't know if 1900 is awful per se, but the trend doesn't look good there in silver and gold, does it? Right? Hold a little bit of silver and gold to protect yourself against inflation trade has not been working. Okay, and here you got copper. Copper continues to look bad. So like the global growth picture is just a little questionable. Bitcoin trying to hover back up towards its highs. So something I want to note here was that Michael Saylor tweeted yesterday that they had bought another like 12,000 Bitcoin, which is a little startling to me because we've had this rise through here. How long has he been buying it? Well, his average price was somewhere in the like 2800s area. Okay. So like he had already missed most of the move, and it hasn't gone too far since then. And this is really positive news for Bitcoin. I mean, I don't think that the ETFs are necessarily going to get approved, but it's going to cause FOMO. You should see people coming into the market buying, and if 12,000 of that was Michael Saylor, that does not speak well to the ability of the Bitcoin market to attract new money at this time. So I'm a little bit concerned about Bitcoin, although in the short term, probably it's still bullish. Okay. And maybe it just needs to go a little bit higher to start dragging those people back in, right? Okay. And here's the dollar. The dollar not quite peaking above overnight highs, but looking pretty bullish. So that's where we know where we are. And there is that little bit of backwash that I was worried about, right? It was $10. So where we had started looking at things was like 377. So I don't think that we're going to get that far back. Could we get 378? Well, it's possible because we do have like this huge gap above us. And we do have a few things that suggest that there's going to be buying. In fact, when you come over here and you look at the cumulative delta, it is so they traded about 20,000 contracts short. Actually, 25 contracts short. 25,000 contracts short, and we've recovered about 10,000 contracts of it. And so you're seeing this really sharp V shape in all of the treasury futures. So that does say that there are buyers out there. So are you talking to? No. Well, sometimes when the market is really active like this and there's like actual trade going on, usually chat isn't too active. So, but they're there, right? We've got what? We've got about a dozen viewers right now, which is about average for this time of day. They're just listening and trading, right? That is, But I'm not like multi-streaming or anything like that right now. Yeah. We used to multi-stream to Twitch, and it didn't really help, and I kind of didn't like Twitch. Like I think that if the channel had been originally all Twitch, maybe that would have worked. I don't know if we would have attracted the same community. I don't think it would have been as good. But, you know, maybe we would have been successful going all Twitch. But when we were multi-streaming, it's like one person would come in on Twitch, and then they usually annoyed me. So I stopped streaming on Twitch. And now everything on Twitch, well, not everything on Twitch, but there's another competing service. What is the name of it? I can't remember the name of this service, but they recently gave a really big deal to XQC. But this platform basically exists because Twitch wouldn't let them do gambling on Twitch. I'm not too particularly interested in supporting a streaming service that's kind of like the basis of why I started. I mean, if they paid me $1 million, I probably would go for it, but I don't see myself going over there. So the basic point was I don't see myself doing multi-streaming or anything off of YouTube anytime soon. In fact, you know, I used to do a lot of stuff on TikTok. Like, I would post TikTok and YouTube shorts like almost every day. I don't think I've posted anything on TikTok all month. My excuse is it's the summer, but I don't know. TikTok just doesn't inspire me anymore for whatever reason. It's like it's extra work and I'm just not interested. Okay, so let's clear this above us so that we can kind of see more clearly on the DOM how far they get, because they came close there to making another swing high. Well, let's come over here and see if we can find a deeper dive into the numbers, yeah. Titan sub-wreckage with presumed human remains offloaded at Canadian ports. Okay, well, let's read about the initial jobless claims. The number of Americans filing for jobless claims for the first time last week tumbled to 239 from 265K, a 20-month high. The California and Texas saw the biggest drop in claims last week by a long way, while Connecticut and New Jersey saw the biggest increase. While smoother 4-week averages of initial claims rose to its highest since November of 2021, continuing claims continued to drift lower, the lowest since 2023. Very much not what the Fed wants to see after 500 basis points of rate hikes. It seems to me that the Federal Reserve raising interest rates is really not actually tightening financial conditions all that much. You know, there's this whole thing that was like, is it the absolute rate that matters, or is it like the change? I would still argue that it's the change, but I'm wondering if you have to get up to a certain level first, right? It's like if you got to the appropriate level first, which is clearly somewhere above 5%, and then you're having extreme changes, then that would tighten credit conditions. I don't know. One of the arguments that you could make is that it is tightening credit conditions, but after effects of stimulus are still there, it's lagged, so forth. And so that's kind of the recession scenario, right? One that I would say, even after this news, I'm still leaning towards, let's say, which is that we'll have a recession maybe second half of this year, maybe the beginning of next year. Eventually, this credit tightening is going to catch up with us. And I think the problem that I see is that when it happens, it's going to be very, very quickly, right? And it could be accompanied by a major crisis, like one in real estate. There's this whole thing going on about, like, people are saying that Airbnb is going to be collapsing, and that all of the people that own Airbnbs are going to be selling them. That could certainly hurt real estate prices. And then you got the commercial real estate sector, right? So, things could come back in a major way. And then, of course, the concern there is that if things come back in a major way, then you might end up with another bout of inflation. So, I don't know. Well, on the Treasury's front here, we have returned back to the middle, if not kind of selling again. So we only got like 1 basis point of pullback. They got to be careful, because this is such a tough trade, guys. Like, this whole setup kind of puts us in. I really don't like trading against, the dominant action for the day, right? So, like, we've come down. If the end of month flows become dominant from here, I think what you could see is maybe a little bit lower and then something like this. Which, when I draw it out, seems kind of silly, doesn't it? But the end of month flows could lead to reversal. I don't know, man. It sure is selling hard. Sure is selling hard. Oh, and I mean, they did come back a decent amount in cumulative delta as well, so. Not sure what I want to do about it. I may just kind of sit on the sidelines, since I'm a little bit uncertain. Especially when you breach like a weekly low like that, and think, that can really upset the balance of power in the instrument. And it's not like that means, oh, stop running, we're going to keep running lower. It kind of sets up a more dramatic situation, right? Like, if we do move lower, it's pretty dramatic, and if we do bounce, it's pretty dramatic. So it's I really feel like that I need to have strong conviction if I'm going to take a trade in this, and I really don't. I really feel like I should be trading it, but hey, Walter. Oh, you made your shift start at the very morning. Yeah, that sucks. I just absolutely hate schedule changes and stuff, Like, my kids, they wake up at like a different time every day. I can't stand that. Gotta wake up exactly 5:25, Like, one of the things that I don't like about being on vacation is the sleep schedule thing. And if, like, all of a sudden my work was earlier, my day job was earlier to where the streaming didn't really make sense, that would be tough. I don't know. I would do it if they paid me enough. I'd do it if they paid me enough. Which I am getting kind of like antsy about. Because for the last 3 years, like really since 2020, I anticipated that 2020 that I would be a little bit risk off. That was before the pandemic happened, right? Because we were pregnant, and it was like, well, like excessive risk taking and all of the drama that's involved with big positions and things like that. Probably not a good idea to do when we have a new baby, right? And then we ended up with a second one. Well, the first one was like really difficult, first of all, and then we got the second one. Now the second one is a year old. He is getting to the point I have to watch him carefully, mostly because I'm concerned that the older one might do something stupid and hurt him. So I watch him real carefully. So far they've been good. It's so funny. Ethan loves his brother. He does. Ethan loves Asher, and Ethan totally trusts him, and he should not. He should not. You know, like Asher will take him and like pick him up and then plop him over somewhere or like push him over, and Ethan thinks it's a game. I was like, no, that's Asher being autistic and doesn't understand that that's mean and possibly dangerous. Like he would push him down the stairs and think it's funny, not realize. So, but overall, it's not like I have to be like my entire focus on that like it used to be. So that should put me in the position to maybe take some bigger risks. But not this summer. The summer's not the best time. So we did push like what, 2 new ticks here lower, running into another large iceberg at 14. So you know, I'm just remembering when I was reading like my morning news squawk synopsises and everything, they were saying, you know, there was like upticks, but like they were selling into them. It would uptick and everything was selling into them, right? Now we're selling quite hard. Those bids aren't pulling away. Those bids are filling. There's quite large icebergs in there. So like there's actually some pretty massive amounts of like profit taking and so forth going on here. But the selling just keeps coming. It's not backing up at all. We only got 10, like I said, 10 ticks pullback. So here in a situation like this is where it can be really frustrating is you might be weary to jump on the trend because you don't want to sit through like 20 ticks of pullback or whatever. But then like it never does it and you could have just bought it literally anywhere and made money, you know? Sometimes that happens. And today might be one of those days. Like so far this is ticking like this is a trend day, you know? Is it that big of a deal? I don't think that the GDP and jobless claims news that we got is necessarily a bigger deal than the other news that we got earlier in the week. What was it? Wow, we're 15 basis points higher on the day. It did jump quite a lot on the initial news, didn't it? Let's see here. Oh, it was that consumer confidence in new home sales. I guess they're probably on par. I guess they probably should be on par. But I'm not so sure if this is like, because I've been saying for I think maybe 2 or 3 weeks now that interest rates are probably going higher, right? And it's just kind of a question of like, you know, playing the right spot and everything. So I think that this is more just, you know, a coincidence of the number of orders that are coming in and so forth, but it is in line with my larger trend, right? And most of the money that I've made here over the last month was from selling. Well, going long interest rates, selling treasuries. Another thing, I wonder, like there have been some pretty big icebergs in here. That could be some of that end of month buying, potentially, right? Because if you absolutely have to buy treasuries here, because you're like a risk parity fund or whatever, like you really want to get the absolute lowest price that you can, because, the chances are that they continue to go lower this year. There's another one. See, we could have gone long 3.8, sat through 10 ticks pullback, and we'd be up 20. Like that would have been acceptable, right? Let's see here. And how did that breach compared to... Ooh, yes, we have. Okay. So now we're below the lowest levels from the 14th. And the next major benchmark is 0.5 half. Wow, 0.5 half would be... Now, 0.5 half is a little bit down there, right? That would be a pretty big move. No, that wouldn't just be a pretty big move. That would be a massive move. Like, this is already a pretty big move. To go down to 0.5 half would be a real massive bender. I tried understanding the NQ in the DOM for fun, and I had to see... Yeah. I feel like for instruments like the NQ, that your analysis of it has to be a little bit separated from your execution of it, right? Because it moves around so much, and the game that you're playing in terms of like getting an order filled or hitting is like totally different from like what is really going on, the buying and selling and the interaction of the orders. And that part just happens so quickly that it's kind of difficult to even attempt to see it on the DOM. And so maybe if I was trading NQ, maybe what I would do is have one DOM, like maybe I would pull it up twice and have one DOM that is every price level to execute on, and then another DOM with slightly different settings that like has the tick multiplier on it and has the reset time higher. And yeah, I've tried tick compression on NQ. I mean, I have it up on the screen because I would like to build a new machine. And when we build a new machine, maybe we'll pull more of those up. I've had problems in the past though when we get into like the craziest of market conditions, which by the way, even though this is a big move, I would say it's still very much like summer action, and it's not like crazy. It's not like man, there have been some markets where like the computer just has a hard time keeping up, right? It's probably better now because I have the video card, can do the encoding and stuff, but man, yeah. So I reduced the number of instruments that I had up because of that. So when we get a new machine, maybe we could fit the NQ over here, move this chart over a little bit and fit in the NQ or something like that, and do it with tick compression. As long as it's not distracting. That's one of the problems that I've had in the past, is that you put some of those thinner instruments on and it just becomes distracting. Man, oh man. I really should have just hit it, huh? I tell you what, man, when the market goes, it always goes more than you expect. Now 0.5 half is only is a stone throw away. I must say though, the tick compression over here in ES, super helpful. You know, I can watch and analyze ES like I used to 4 or 5 years ago, you know. I really wish that ES would change. I wish that the S&P 500 would rebalance. Like, isn't there a point at which the index has a number that's so high that it's not useful anymore? What point is that? Like at 10,000, if the ES is above 10,000? Like I feel like that at that point you should do like a 10-to-1 split or something like that, you know? By the way, that 10-year pulled back pretty quickly. And again, there are still some potential buy flows out there. So I really, even here still, I still kind of think that you got to be careful about. There could be excessive pullbacks. In fact, it wouldn't surprise me to see this pull back to 112.17.5 again. By the way, you know, the S&P 500 did sell, but it's not that, it's really not that dramatic. I mean, it's still clearly up on the day. Yeah, top US officials have firsthand knowledge of secret UFO program, says Rubio. So probably these same people that were talking to the whistleblower are also talking to Rubio. This is getting weird. Well, now I would say its price movement is a little bit more volatile and random. So if we want, I don't like to play reversals. I really don't. But this might be the kind of spot where we could do that, or we could try and play the range a little bit. Because basically you're getting all those signs that, like, okay, we've traded a ton of money, or sorry, we've traded a ton of volume in this area. It's moving across it quite freely. The inside bid offer is, it's not quite as low as I would like to see for this sort of a thing, but I think we probably still have enough in favor for us to do it. I can't do it on my sim account because you know, I think that to really play this, I need multiple contracts. So I'm going to do it here on Sim. It seems that some of the, it seems like the market orders have kind of sputtered out. Because they're not really taking these prices now all of a sudden, see? Like, the level 2 is dancing around a ton, but we're not actually seeing a lot of volume come through and, you know, price moving and so forth. Okay. So that was a pretty aggressive downtick. That 3K built up at 10 as well. They're having a hard time holding 09.5. I may have to puke this. Maybe I was wrong. Let's see here. Well, the dollar does look like it's still kind of. So I need to zoom in on the dollar here a little bit. Yeah, it does look like the treasury is following the dollar here. And the dollar is kind of pushing on the up bit. Japanese yen as well. Is Bitcoin moving on this? No, it's not. Okay, so let's read Zero Hedge's synopsis of the GDP data. The second revision to quarter one GDP data, which comes some 3 months after the quarter in question is long over, and is still not the final revision as the data continues to be massaged higher or lower for years to come, is usually a very boring affair after all. The BEA, Bureau of Economic... I don't remember what the A stands for. Is supposed to have all the estimates and soft data replaced with hard actuals by now, and the bottom line number should be fine-tuned at best to the tune of 0.1, 0.2 at most. Not this time. Moments ago, the BEA reported that according to the third estimate of quarter one GDP, the U.S. economy grew much faster than expected at the start of the year, rising at 2% SAAR, up dramatically from the 1.3% GDP print reported in the second estimate 1 month ago. Up almost 100% from the 1.1 initial quarter one GDP report published 2 months ago. Oh wow, you know, I didn't realize that. Oh, by the way, they pushed a little bit lower there too. Holly, we should just keep this into the iceberg. I don't know if I want to mess with that one. That's a pretty big iceberg at 08 though. It may actually, well, more importantly, the number was a 2 sigma beat to consensus expectations of a 1.4% increase, the biggest outlier to the third GDP estimate in over a decade, and a testament to how unexpected today's beat was. The GDP estimate for the first quarter was revised up 0.7 percentage points from the second estimate, primarily reflecting upward revisions to exports and consumer spending. The increase in the first quarter primarily reflected an increase in consumer spending that was partly offset by a decrease in inventory investment. Increases in consumer spending reflected increases in both goods and services. The decrease in inventory investment primarily reflected decreases in wholesale trade and manufacturing. So it's very interesting that like we continue to be in this world where like in the beginning it's like all of the numbers look good and then they look bad, and then as time goes on they all get revised. And then we see another set of data that's like the opposite. Like jobless claims is like they'll look good and then they'll get revised down afterwards. And so like there's a huge problem here with trying to judge what the fundamental economic situation is because the data that we're getting is not seem reliable. Okay. Okay, elsewhere, while very much irrelevant now that we are about to enter July and the second half of the year, the report also revealed that according to the BEA, the GDP price index rose 4.1% below the 4.2% expected, but up from 3.8% in the previous estimate. Core PCE also rose less than expected. While today's number is irrelevant for markets and the bigger picture, what is curious is how aggressive the upward revision data was. As such, it suggests that the BEA bean counters have far less fudge space to make quarter 2 and quarter 3 GDP look stronger. As such, don't be surprised to see GDP in the current and next quarters come in well weaker than expected, which is key since many analysts expect the recession to start sometime this summer. Let's hear what Bob says. Bob Iacino, GDP headline revised higher than expected. Jobless claims, 26K lower than expected. Finer cells, 4.2 versus 3.5. Core, 4.1 versus 3.7. And the Fed is going to back off from the 1 or 2 rate hikes they have said are still needed. Don't be fooled by those base effects, my friend. Joseph Wing, if you look at a few common transmission channels of policy, it is pretty clear that things have not gone according to plan for the Fed and a few other DM central banks as well. In my opinion, there is upside risk to the terminal rates. And he has an article on his that's, behind the paywall. I'm kind of wondering if I'm still looking at like there could be a little bit of a reversal here, but I'm starting to look at this and go like, no, it's not going to happen. I don't know if it's going to move much lower either, though. I think that it may just be that I've missed out. Because what I would really like to see is to see it come back pretty hard and then me have the opportunity to take it short again. I don't know if that's going to happen. Start selling it so it'll reverse. Trust the process. Well, I don't think I realized how significant of a change that GDP revision, because it was like it was saying at the beginning of that article, which is that like the GDP numbers kind of start to become a boring thing because like most of the data is already in, it doesn't change very much. And I didn't realize that it was like 2 versus 1.4 is like, it just, I don't know why. That really should have had an alarm bell going off in my head, but when it came out, I was like, well, okay, that's a little worse. That's a little better than expected. That'll probably sell. Really, what I should have been doing is looking at this and as soon as it moved, been like, oh yeah, that's bad. Buy 378, right? So my bad. But I guess it's just such a bizarre number that, it's... Well, that was kind of an aggressive uptick. That is also an aggressive uptick. Oh, wait. Yeah. Well, I was a little concerned about the possibility of them going down to 0.5 half. I think it may still happen. But like, again, so like the scenario that I had drawn out earlier, I don't think that one's going to happen, right? I think that it's probably more likely to do something like, it might come back to here, and then this is going to die out somewhere over here. This is kind of what it looks like to me at the moment. I could be wrong though, because those last few ticks were a little aggressive. A little bit of a surprise there. Like that was about 8,000 contracts or something that went off pretty quickly. Yeah, it would take a big news shock for it to reverse significantly. And see, like the scenario that I had out in my head earlier was like, well, okay, this is good economic news. It's slightly better than expected, so we should see some selling. But we have end of month buying flows that will come in, so like we'll probably see it sell, and then those buying flows will come in and reverse most of it. Now I'm looking at this and I'm like, man, if you are one of those guys that have to allocate more into treasuries here, it's probably just, making your stomach churn having to buy it, I guess there's still PCE tomorrow, right? I don't know. This little move that we've had up here is about as good of one as we've had. Yeah, but playing it would really have to come back. Like if it came back to 17.5, then maybe it would make sense for me to try and play it then. Right? So let's think about it from the perspective of rates here, right? Because we started the week at 3.75. We were at like 3.5 not too long ago. I really, when I made that shift and I was like, oh yeah, interest rates are going higher, I should have just taken the long-term trade. I really should have. Because I would be up like $300 or something. It would be more than what I've made from scalping it. It would be more than I've made from scalping it. And it potentially more if it goes up to 4%, right? If it goes up to 4%, that's $500. But, okay, so then there was 3.8. 3.8 was kind of like a little spot that they kind of chilled at for a little bit, and you can see that there's a little bit more volume there from the retail traders and the micros, right? And then it kind of shot up, and that's the one where we're like, oh, look, 10, 20, 30. So it could have made 35 off of it, right? So if we're headed to 4%, next stop is 3.85. That could happen today. It's really weird how the treasury market works with even numbers, right? Like Uzi was pointing out the 112.08, 112.16. But it also does stuff like that at the spots where the micro yields are at even numbers. Like 3.8, 3.85. Yeah, it makes, yeah, when you realize that it's a quarter of a point. Yeah. It is 0.08 in the treasury is a round number. It's like on par with 44.25 in the ES though, right? In terms of the roundness of it. It's so weird to call it a round number, but I think you guys know what I mean. You got to be playing really precise game even on the institutional game to sweat anything between them. Maybe. Oh man, look at that. I take a blink and they're down 3 or 4 ticks. Come on. Well, there wasn't really selling on that. I think that it was just coming back because the dollar kind of turned up a little bit again. And that's another thing is that we have seen a lot of volume in the treasuries for sure. Don't get me wrong. Okay, there's some really strong flows coming into the treasuries, but it still looks like the dollar is the dominant player today, don't you think? I mean, if the dollar is going to continue to be this strong, if the dollar is going to whoa. That was interesting. So a 3K market order buy just came in there at 112.10. So this guy that had bought it up here, he's still there. Look, I didn't get filled at 10. So that would tend to be a place that would maybe get price stuck a little bit. Let's see. And there was an iceberg at 12.5 that was relatively large as well that we should make note of. Let's see here. That was at 10. Oh, it looks like my other, I didn't need to do that in my other order. It is going to get filled there. Okay. Trade normal charts? What do you, no. Nobody, who needs the charts? Is this all just, are you trying to bait me into complaining, arguing about charts and price action and all that sort of stuff again? That's what that sounds like to me. It's a new name, so welcome to the stream. Yeah, I am kind of wondering if the problem here is that I'm trying to play against it, and so As soon as I try and sell it, that's when it will reverse. There was a buyer there, though. He hasn't puked either. No, not Renko charts. Oh, killing me here. Oh, see, I can't handle it anymore. Renko charts are a lie, my friends. Renko charts are a lie. Everybody looks at them and they're like, "Oh yeah, that would make it so much easier for me to see which way the trend is actually going and get in a good spot and everything." No. It's a complete fabrication. When you're actually trading each bar, it doesn't look like that. They changed it after the fact to look good. So the whole thing is a lie. And then you got these guys out there that like go and make back testable Renko charts and stuff like that. And it's just like, effing why? Well, I'll tell you why. Because what happens is everybody, well, not everybody, but anybody that programs, they probably at one point or another go in and experiment with exotic bar types. And they go and they say, "Oh, hey, if I do a Renko bar or what's the other ones? Range bars kind of do it too. Hey, all my back tests look really, really good." But then, there's like flaws in it. So you don't want to abandon the strategy. You still want to hope that it works. And so you go and you get the back testable bars. But you're matching. So I was thinking about this the other day because I saw a TikTok where this girl was having a job interview. And in the job interview, the interviewer wanted to talk about all of these rich people things that she would do. Like she wanted to talk about skiing or something like that. I don't think it was skiing, but it was like rich people activities, right? And this girl was just like, "This is a job interview. We're like in the middle or a little ways into a job interview. Why would you be talking about that sort of stuff?" And she just didn't get it, right? Oh boy, it's gonna go lower, isn't it? And so somebody like stitched it, and they're saying, "Well, so see, what's going on here is that if you're like in a startup where you're frequently looking at investors and stuff, you have to be able to deal with people that like to wealth signal, essentially, right? Because investors make decisions off of those sorts of things, and the closer you get to, quote, the C-suite, the more important that sort of stuff becomes." And I kind of thought about that. I was like, well, darn, if somebody wanted to talk about skiing, I'd be like all over it, or whatever it is that they would talk about. If I can tell somebody's really interested in something, I want to, I try and see if I can pull the autism out of them, and be like, okay, let's see if I can get you to hyper focus on this subject and tell me everything there is to know about it, and I'll just absorb it all, right? That's the way that I like to do it. But it would probably go over my head that this was like some test about how do you deal with rich people and can you wealth signal back and these sorts of things, right? I don't like to wealth signal. I hate doing it. What, ski brand clothing? Well, I have been doing a big long... So see, the correct answer here is just that I should do, what is it, Arctech or whatever? That's not what it's called. Yeah, Arcteryx, that's right. The correct answer is Arcteryx, right? That's the... Oh, hey, they bounced back up there. That one was a little weird, don't you think? That could have been that big buyer might have puked a little bit of it. I don't know. Your choice is Montac. Montac. I think I'm gonna buy my ski pass here soon, so yeah. Anyways, you know, all of these things that you're supposed to do to signal wealth, I'm just kind of like, who effing cares? For me, if I'm gonna do something like that, I want it to be like something super subtle. You know what I mean? Like, piece of clothing that is really nice because of the type of material that it's made out of, but you know, nobody would ever know that that's what it is from looking at it, unless like maybe they owned one too. You know, that sort of a thing. But I'm not into go and buy a Gaudi watch or these clothes just so that everybody knows you're rich, right? Or frankly, go and do a hobby just because you're rich, right? Like become a polo player or something like that. You don't necessarily like polo, but that's what rich people do. And to be in the club, you got to do polo. So you got to go and play. You know, that to me is like, screw that, right? I want to do what's interesting to me, right? But some people do care about those things, you know? And I was thinking about that, I was just kind of realizing, like, you know, like the world of trading is very different. And a lot of the people that would actually stand a chance at trading, you know, because they do have the money, they're going to be those rich people that like the signaling. That's why you have these people that come into chat all the time, kind of saying crap like this, right? But those things kind of work against you in the trading world, because in the trading world, you don't necessarily want to, like, you don't want everybody to know that you've got a ton and that you're swinging big, because you know, they'll try and play you and stuff like that. So you kind of keep things close to your chest. You know, if I'm talking to somebody, and I'm trying to determine like, are they a good trader? Are they worth my time? Whatever, like that. I'm way more interested in, like, what kind of information do they give you, rather than what things do they, you know, like, do they brag about how many contracts they're trading and stuff like that, right? Like the people that do that sort of stuff, immediately I'm thinking scammer, right? Because that's what scammers do. They try and show all of the wealth signals to you so that you'll want to go and buy them, right? And so I think it could be the case that kind of like some of the cultural biases and like strategies that you develop as a rich person work against you in trading, that you kind of have to overcome and learn. Because I don't think I personally have met. There's definitely some people out there. Like, I think Brannigan Barrett kind of fits in that category of, like, you know, he comes from a wealthy family, and then he went into trading. But then my understanding of it is that, you know, the trading in the beginning was very, very scrappy and everything, right? And he went through like difficult times too and everything. So it's like, you know, trading in reality is like the lowest of the lows sort of a thing. that to be a super wealthy, you know, like a billionaire, and then to come in and to do day trading is kind of like descending, you know, coming down from the C Street suite to come and interact with the plebeians on the trading floor, right? Because the people that were on the trading floor, they were kind of scruffy. Like the culture from, not that I was there, obviously, but like for what I've seen from movies and people talking about it and stuff like that, the culture on the trading floor was not this posh environment. It was a scrappy streets kind of a thing, you know, and a lot of the people that were there came from nothing. It was working class, exactly. who's working class. I don't remember how that tied into what Hans was talking about, but I guess my point is that the thing that will impress me is like, what kind of information can you give, right? Because a lot of people would love to hear, oh yeah, I've been trading this, I've been using this kind of chart for this many years and I've made this much money from it. I don't care about that stuff. Like, I've found that like genius rarely understands itself. Like there are a lot of people, I can't tell you how many people I've met where they've made some good money, and oh man, there was this one guy in particular that like he had made some decent money from trading, but he had only been doing it for like a year or two. And so he described to me how he was trading, and I was like, oh well, the reason you made money was because the trend for that instrument has been this over that time, and you were doing this. But when that economic condition ceases, that strategy is going to be dismal, and it's just going to completely fall apart real quickly, you know? And they didn't believe me, and then they came back and they're like, yep, it happened exactly the way that you said it would, Seth. I wish I had listened. That's happened to me many, many times. So I'm always more interested in what information can you actually give me? You know, like if it's Renko charts, then it's like, well, okay, I did Renko charts, and I have Renko charts that are back-testable ones, and I did programmed my strategy with them, and here's the stats of it. Now all of a sudden I'm interested because you're giving me like real verifiable information, right? Rather than wealth signaling, you know? And the system was good until the rich made it a BS casino. I really want to, so we got my Series 65. I'm working on a Series 3. One of the things that bothers me about the investment advising world is that it seems to me that the investment advising world is really all about convince somebody else to give you their money and then you invest their money for them. And that's really what investment advising is about. That the people that are really making money from investment advising, that's largely what they do. I mean, you can do this thing where, they give you all of their information and then you write a plan up for them and you give them this big document that with all the charts and everything explaining what to do, and then they can go and carry it out or make the changes. But that's not, the real money is in managing the money for other people and then charging a fee on the assets under management. That's where the people are really making money from it, that it comes from. And not that I'm not interested in managing other people's money, but I am more interested in empowering other people, I can slap together 1,000 pages of technical analysis to impress a normie into giving me $1 million. It's all fees first, reputation. Yeah. I'm more interested in empowering people to invest. I don't like that most people don't actually have to make investment decisions. They just put it into the 401k and let the index manage it for them. I don't like that. I think that a lot of the problems that we have in our system today, Uzi talking about that, like they've turned it into a casino sort of. I think that a lot of those problems stem from the fact that there is very little individual stock investing now. And the indexes dominate everything. And then all of the hedge fund strategies and so forth all stem from placing hedges on those indexes, Sure you could. I don't know if I really think you have to be like they give you $1 million and then you charge a fee on it every year. You know, you charge them 1% or whatever, and then when you have a couple $1 billion under management, then yeah, you're making, you know, $200,000-$300,000 a year just from the management fees. Or you have a hedge fund and you have the performance fees from a hedge fund. But see, it's coming. Yeah, being a mega genius quant is what you do when you slave for the guy. Well, yes and no. Because the thing is to be that other guy, usually you have to have a huge wad to start with, right? Oh man, is the dollar gonna go again? I really thought I was going to pull this out, and the dollar is just not backing off. Do you remember earlier Uzi said that was like the last fake move lower before it stops doing that? I don't think that's what's going on. I think they're just reacting to the dollar, and the dollar keeps going. Being a mega genius quant is what you do when you want to slave for the guy who does exactly what I just described, and ironically, that's what most retail traders want. This it's clearly not working, so I'm just gonna puke it. It had its moments, but now the question is, should I? Well, I think I will. Don't jinx it by making it real. Well, what I'm doing is I'm putting an order way back there that they're never going to fill, so that, you know, they'll just run through. It's actually, this place is no good. Because it's right at 05 half, right? Let me come back here. Yeah. That 05 half is like the low from this whole kind of channel since the Silicon Valley Bank disaster. So probably need to be a little vigilant here. Okay, what was I saying? Oh yeah. Okay, the people that are doing what Uzi describes, right, are like mostly working for banks and investment companies and things like that, right? Like worked their way up through the corporate ladder. If you're not in the industry, if you're like me, you want to start an investment advising company or something like that, right? I think you kind of have to have both, right? You have to have a genius quant. Either you hire one or you're a genius quant. And, you know, if you're trying to bootstrap it, you're going to have to be the genius quant. And you're going to have to be able to sell it, right? You're going to have to be able to convince rich people or have rich friends and connections that are willing to give you the money to do it with, right? And you're probably going to have a decent amount, like $100,000 to start with anyways. Most of these like big hedge fund guys that I've read about or have written stuff, you know, they often started out with like 100,000. So make of that what you will. Music. No, we're okay. We're okay. I kind of forget what it was about what Uzi had said that I was kind of like, well, I don't think it kind of works like that. But. Oh, well, but the bigger thing is I want to empower people, right? So like the time is coming, I think, where a lot more people will have access to some of these kind of exotic investments, let's call it, right? Like hedge funds and private offerings and that sort of a thing, right? The time is coming, like a year from now, where a lot more people are going to be able to do that. And the problem is twofold. So if you're one of those individuals, you go and you take the test and now you want to go and invest in that stuff. Okay. Number one, the minimum investment is often going to be higher than you're willing to do. Like if you're, you're still working class guy, scraping by, saving everything that you can to gamble it away in investments, you might only be able to put like $1,000 into any one thing, right? And a lot of these, they want way more than that. They want like $1 million investment or whatever it is, Like most hedge funds, you need to invest more than $1,000 to be able to invest, right? And then the second thing is how do you get the information to be able to even make the investments? Like, how do you become aware of the opportunities? How do you, like their hedge funds are starting up all the time. And if you got in Renaissance Capital at the very beginning, then you made amazing amounts, right? But how do you become aware of them when they're just starting out, right? Because by the time you figure out that that's the place that I want to be in, there's already too many investors and they've closed the fund to new investors, right? So this is where we come in. This is where being an investment advisor could be beneficial to these people. Is you can say, okay, I'll be the hedge fund, and then because we've pooled all our money together, then we have the ability to go and make these investments. And I would want people that, so you could make this thing where, okay, you can put money into our fund for $1,000. And then we also crowdsource our information from our investors. In addition to the other research that we do from paying people that is paid from management fees, right? To find these kinds of investments and then invest in them. And essentially empower a larger group of people to be able to get into these super high reward types of investments. Right? Yeah, it's a single print from March 9th. Like, it seems likely to me. Oh yeah, that March 9th. Yeah, so the next level below that is 22, which is really, really far down there, right? Well, what he's talking about here, let me show you in the chart. We had this big blow up because of the Silicon Valley Bank thing, right? And then we kind of traded in this range, and then there was there was the May decline, and then there was the June decline, and then for the second half of the month we've kind of been flat, and now all of a sudden we're dropping out. So there's this low from the 26th, but below that you just have the single prints from March 9th, right? Which go all the way down to 111.23. So like there's kind of like this gulf below us. We're like hovering over the abyss right now. That's why I was, when we were over here in the 09, because we had seen the conditions and everything, I said, well, I could probably market make across this area. It actually worked pretty well, didn't it? But ultimately they didn't do the reversal. And that's why I wouldn't. Well, two reasons I wouldn't do it live. One is because I don't really want to trade multiple contracts in this situation live. But two, it's not a trade that I have a whole lot of confidence in. It's kind of a YOLO to some extent, right? But it's good practice, practicing the range and so forth. So I'm not going to beat myself over it too bad, but it didn't work, right? Never assume that anything I say is helpful. Yeah, it's true. He plays that game with us sometimes. Well, you can't take any individual. Obviously, when you're here the whole stream, you'll understand what he's saying. But definitely, though, I can't really justify another trade. Like, if I had taken 8.3.5, I could have taken 8.3.5 to 8.4.5. But other than that, no. I made a big boo-boo today. I should have just hit it at 3.8. But it all comes down to being informed, and I had not done a good enough job at knowing where we were at on GDP and all of that. I kind of came in today thinking, this is not like really a huge deal. We'll just get the jobless claims and then we can focus on the end of the month. And my focus was entirely on the end of the month, and I missed something big because of that, didn't I? Nice trend day, Miam. I mean, even if the Treasury doesn't end up being a pure trend day, we saw a huge shift. We just saw a huge shift. Like, I've kind of been feeling all month that like yields are probably going to go a little bit higher, right? But there's still been this group of people that are like really skeptical of that. They're not going to be able to do that for very long because the economy is going to collapse here very soon and all that. I actually am still partial to that. I really am. I still see this situation where like the money is constricting so much. You won't realize it until it's like too late, but like we just will all of a sudden be in a recession, and it'll be real fast. So I think that what happened here was like this was the final straw, like for those guys to say that like, well, maybe that does happen, but in the short term, yeah, interest rates do have to continue rising because a lot of the data that we thought we had that things were kind of going negative didn't come out that way. That actually at the time that we thought that we were supposed to have a recession, the economy did really, really well. And this was in spite of the Federal Reserve raising rates in the most aggressive pace ever. So, I mean, I'm not saying that 05.5 is going to be the lows of today either. If the dollar keeps moving, then I think the treasuries will probably continue as well. Although when you look at it on the Japanese yen, that does look like probably the majority of the move has happened, and probably there's not a whole lot of profit left in it for us. Probably a different story for the S&P 500 though. What do you think? This one is hard for the S&P 500 though, because higher interest rates is bad, and it makes me more concerned about the sort of like, contraction later sort of a thing. But in the short term, it kind of says that everything is going good, and it probably suggests that earnings and so forth in this next earnings, the Q2 earnings are probably going to be not too bad, my guess. So I think maybe we could continue to see the S&P 500 continue to hold water at the very least, if not outright move up, despite the rates rising aggressively. We have a housing number in 5 minutes. Let's see. Pending home sales change month over month. Well, that... Oh. Okay, you know what? Since we're on sim here and everything... Let's gamble on pending home sales. Oh, it looks like I could have gotten 3845. I don't think that they ever ticked 8.5 though, so they never filled that. Going for broke. Hey, NASDAQ Technologies. Okay, here we go. Oh, actually negative. Negative 2.7 versus an expected negative 0.5. Spending home sales better than anticipated. Not much, if any, reaction here, though. So... there going to be some iceberging at 05 half? No. So is the dollar coming back now? Looks like it. The dollar's falling quite precipitously. It didn't go too far, but it is falling. Ouch. Like that, I don't know, that scares me a little bit. That is saying to me, like, go ahead, Seth, hit 385. The dollar is collapsing. Yeah. Dude, I'm telling you, man. And well, you could come back and look at the larger chart here, NASDAQ Technologies. It is not collapsing. I tell you, I told you guys this earlier in the month. Did I not have like a huge rant like 3 weeks about this, right? Anytime that the dollar short shrills get too loud, just go long the dollar, man. Because when those guys get loudest is right when they get totally effed. So they're not looking at this from like, oh, Federal Reserve is raising rates. The economy is still going fine. You're going to have to raise rates further. That's going to be good for the currency. They're not. They're thinking about, oh, we have this, all of these things that don't really matter to the current situation. You know, political considerations, and so it doesn't work for them. You know, they're making, essentially, it's a trade based on an ideological premise and not flows, right? So they always get screwed. Yeah, I tried selling the bottom. Well, because I thought that the home sales was going to be positive, but I was wrong. I was outright wrong, but it's still okay, so I think I'll just stick with this. See, look at that. I could have done 385. Wrong cookies. This is okay. Like, now that we're below 0.5 half, it's really something else, right? We are in no, but that's the thing, is that the economy is doing really well, NASDAQ. Like, that's why we're seeing this, is that we thought that GDP was 1.4% in quarter one, and it was 2. What do you mean by cycle? Oh no. When I was a missionary, we would do biking, but not now. No, my rich person hobby is weightlifting. Which is kind of funny, because you set up all of this stuff in your garage, and then it's in your garage and you still look like a poor working slob. Because people don't realize how much money it is to have those weights and so forth in your garage. To have a good setup in your garage. Although I guess if I was truly posh, I would have it in a nice indoor air-conditioned room, wouldn't I? Man, oh man. Should have done it. Why didn't I do it? The thing is again, like, this is the abyss. 2-2. Yeah, Olympic weightlifting. You believe this, man? Can you believe this move? Because he says volume is behind it too. Oh yeah. Well, so like the thing is at this point we're like 40K negative, and this is probably like a 60 to 100K kind of a day, I think. Where's a good place to go long rates? I don't know, but a little bit of an iceberg at 02. I haven't flubbed up this bad. I mean, I guess it's okay that the flub was I didn't take a trade on it, but man, I don't think I've been blindsided this bad in years. Like I thought it was bad when I kind of during the Silicon Valley Bank thing, it's not like I was selling treasuries or anything like that. But especially in the period after that, I felt like I didn't completely know what was going on, and I had a hard time making money from it. And I thought that there was some periods earlier in the year that I had struggled with, but this one I really just completely did not see this at all, and I had every opportunity to do so, right? Like, I hope that if you're new and you're like you don't know what I'm talking about with informational inefficiency, and you're like, what's wrong with this guy? Why isn't he taking a trade? I hope that you can see this situation where, like, you might know something that I don't, and you traded on it, and it wasn't even in this instance so much that it was like I didn't know. It was like that the information was not properly prioritized in my head. It didn't flash as a significant data point to me when it should have. Was there a pull there? I don't know what you're talking about, Uzi. There's a big old order there at 120, at 112 though. Well, you know, any of you could have come in here and said the GDP being revised from 1.4 to 2% is a huge deal, right? I did not realize it was a huge deal. I should have, but I did not realize it was a huge deal, right? So you literally could have bought 3.8, maybe even 3.9. I mean, if you had just heard the number and clicked, our bid depth is totally different. Well, that is weird. You only see 2,700 at 112? Well, I'm pretty confident that that should be correct, though. He says he sees. Yeah, that can't be right. There's almost no way that there's only 2,700 at 112 even. Yeah, that is a little concerning. Concerning for you. Yeah. There's no way. There's always going to be a huge order down there, especially in a situation like this. That is definitely weird. I mean, I'm not seeing many changes in the orders out here. Well, there was one. Okay, so now that it changed to 4993 and then back to 2. Now, do you still see the number that you do? Do you still see that it's only like 2,700? Okay, we'll see if you reset platforms. Like the thing is you could have something where, like, you had the number, it was put up there, and then it just hasn't been updated. But then if somebody puts an order there, then you should get the level 2 update, and it should update, right? So there was a pullback. still 1850. That's so weird. I can't explain that. Are you looking at U? Are you looking at the U contract? ZNU 23? $9.23. What else could possibly be going on there? And do you have it set to show 10 or more levels of depth? I'm gonna go out on a limb here and say that Kinetic is having a problem. Like, maybe you should message Kinetic. Well, it looks like it's going to come all the way back to my original entry here on the short. What about the other prices? Like, what do you see at 112.08? Have 32.53 up there. Look at that. $32.53. Well, it changed now. It's 2,700, but yeah, I think they're having a problem with their platform. Maybe it declined too much. I don't know. I can't 100% explain that. I'm out of theories. I'm out of theories. I know, and it's not cheap data. It's not cheap data. Okay, well, we're at 3845. Do we want it now? So maybe it's not. Yeah, I am kind of leaning towards that your provider is screwing up. So let's go back on memory lane here. Earlier today, we had come down to this spot where things had kind of died down a little bit, and we had a bit of a pretty quick rise here. Up and through this area, right? And we're like, oh, well, it came back, but they were still buying, right? But then they puked. They puked, and eventually we pushed lower. So now here on this move, you're seeing a similar sort of thing. Somebody did buy it back here after all of that. Does it actually reverse? Was that just people taking profits? Or do we go lower? Well, we're reaching pretty big extremes. Like, I don't know how much more the market makers can take. I think that this probably does have to pull back a significant amount at some point, but well, but he's not Continuum. He's using Kinetic, right? Kinetic is like their super expensive data one. Like Kinetic, you can spend like $10,000 a month if you subscribe to everything. So like if you go to Kinetic's website and you can like try and sign up for it, and you can see how much it all costs, and because there's like lots of options with that one. The Kinetic is generally thought of as better than CQG and Rhythmic. Yes, it's a step up. Like Kinetic is more akin to like Rhythmic's advanced subscription. But Kinetic also is marketing more towards, less towards like traders and retail traders, and more people that are just need to keep track of lots of markets, I guess. More professionals. So oh, you know what? I haven't been paying attention. Did we get the did we get the new Supreme Court rulings? It is Thursday, isn't it? Yeah. Okay. First opinion. First is Arbitron Hatronic. I'm not familiar with that one. Whether the U.S. Court of Appeals for the 10th Circuit erred in applying the Lanham Act, which provides civil remedies for infringement of U.S. trademarks extraterritorially to Arbitron Austria's GmbH's foreign cells, including purely foreign cells that never reached the United States. And that decision was vacated and remanded. Groff versus DeJoy. Interesting. Whether the court should disapprove the more than de minimis cost test for refusing religious accommodations under Title VII of the Civil Rights Act of 1964 stated, whether an employer may demonstrate undue hardship on the conduct of the employer's business under Title VII merely by showing that the requested accommodation burdens the employee's coworkers rather than the business itself. Okay, so that one means the guy that was saying that it was unfair that he has to work on Sundays, they're saying, nope, you do. Decision is vacated and remanded. Okay. The court holds that Harvard and UNC's admission programs violate the Equal Protection Clause of the 14th Amendment. Sotomayor dissents, joined by Kagan and Jackson as it applies to the Harvard case. Jackson dissents in the UNC case, also joined by Sotomayor and Kagan. The decision is incredibly thick, so I'm still reading it, but on first blush, the court appears to hold that the Harvard and UNC programs do violate the Constitution. The court says it has permitted race-based admissions only within the confines of narrow restrictions. University programs must comply with strict scrutiny. They may never use race as a stereotype or negative, and at some point, they must end. Roberts writes, however well-intentioned and implemented in good faith, the programs fail each of these criteria. Here's the end of the court's opinion. Nothing in this opinion should be construed as prohibiting universities from considering an applicant's discussion of how race affected his or her life, be it through discrimination, inspiration, or otherwise. But despite the dissent's assertion to the contrary, universities may not simply establish through application essays or other means the regime we hold unlawful today. Okay. So they're saying, you know, you can't just say, oh, well, we don't ask you for what your race is, but you put it in the essay, and if you put it in the essay, then we'll get you. And they're saying you can't necessarily do that. Not that applicants can't mention that, but they're still saying that it has to be within the confines of narrow restrictions with strict scrutiny, and it cannot be used as a stereotype or negative. Kavanaugh's concurring opinion has more language about the effect of this decision. In light of the Constitution's text, history, and precedent, the court's decision today appropriately respects and abides by Grutter's explicit temporal limit on the use of race-based affirmative action in higher education. Meaning you can only do this for so long, I guess you could say. Huh. And, well, interesting. Joseph Wang commenting on this, all my life I had to work harder to get to the same places others. Admissions deans and HR offices had a policy to discriminate against people who looked like me and would even brag about that policy on their websites. Good step towards dismantling institutional racism. Yeah. Sounds like a good decision to me, but let's go to Reddit and see how upset Reddit is about it. That should be fun. I was looking for a Reddit alternative the other day, and I found one that I kind of liked, but you have to have an invite to get in. Dude, this is coming back so hard. Every other price on our ladders match. Well, that is really weird. Put a bid in at 112 and see what the queue says. 5,069. And I wish I had more time, because now that we're back to 3.84, I'm kind of liking it again. That is so weird, Uzi. Yeah, there's definitely something going on. Maybe I need to go to r/politics to find out. r/politics. Oh, look, they made an official thread. I know. Oh, Biden is supposed to be speaking at 1 p.m. Eastern time, so around 11 o'clock about. Biden gives major address on Bidenomics. That'll be interesting. Ginsburg refusing to step down and trying to set the Supreme Court Trying to set the Supreme Court back decades, she single-handedly ruined progress for women in civil rights with her hubris. My God, this is, oh my goodness. Surely this, I want to be very clear. I am not saying this. I'm just reading a comment on Reddit, okay? Surely Clarence Thomas will step down from the court given that he hates affirmative action, right? Or is it yet another example of conservatives benefiting from a program and then pulling up the ladder behind them? It is so offensive to suggest that Clarence Thomas is only on the Supreme Court because of affirmative action. Like, I don't think it's very wise to look at any one individual person and say, well, you only made money because of affirmative, you know. You don't belong there. That's so offensive. Interestingly enough, though, this is not the biggest decision. Like, you notice that there's, what are they not putting out yet? It's the ones about student loan forgiveness. So I didn't watch too much of that. I did see some clips. The clip that I saw was, you know, they were saying like, you're not calling it a pause and everything, and so what are you calling it? And he says, well, we're calling it leaving the interest rate at its current level, and the audience laughed about it, but that's all I had seen, and I'm not too familiar with that reporter. I did catch on to the fact. Listen, it's just me. If somebody's good looking, I can't help but notice she was good looking. Vacated and remanded back to the lower court after clarifying the standards, still parsing the implication. Oh, it still goes back to the lower court. That's interesting. She was clear. Okay. If you say so. So the opinion on Reddit is actually a little bit mixed. Some of the top comments are a little bit offensive and everything, but I don't think that anybody is trying to argue that the decision was wrong. Oh, this is interesting. Okay. So this is from the opinion. Harvard identifies the following educational benefits that it is pursuing. 1, training future leaders in the public and private sectors. 2, preparing graduates to adapt to an increasingly pluralistic society. 3, better educating its students through diversity. And 4, producing new knowledge stemming from diverse outlooks. UNC points to similar benefits, namely 1, promoting the robust exchange of ideas. 2, broadening and refining understanding. 3, fostering innovation and problem solving. 4, preparing engaged and productive citizens and leaders. And 5, enhancing appreciation, respect, and empathy, cross-racial understanding, and breaking down stereotypes. And then the opinion goes on to say, although these are commendable goals, they are not sufficiently coherent for purposes of strict scrutiny. And the Redditor asks, if those items don't meet strict scrutiny, it is hard to think of any affirmative action justification that does. And this seems to open the door for a lawsuit being brought against companies with programs promoting specific demographics for promotion career advancement purposes, as they rely on the same justifications. Oh, that is so interesting, actually. Dude. If... No, I don't know if it does, because you would have to show standing you would have to say, how would you be able to prove that I didn't get a job because of their policies, right? To show that you were harmed by their policy. I really want 112 to trade to see if there's 5,000 executed volume or not. That is, I tell you what, it really is weird, isn't it? I should have loaded back up. Like, look at this. If I had taken 384, I could potentially be looking at $20. The market was like, look, Seth, we played around with you. We're giving you a chance here. And I was like, no, it's too late. It's too late. Only 30 minutes left. I'm not going to take a trade. And so they're like, okay, fine. Then we'll just keep selling it again. They're probably, the black sellers are probably really frustrated with me right now because they're trying to do everything they can to help me, I think. I feel like that's because I've done so well in June, right? But you know what? That happens to me all the time is like every time that I go through and like I've had a period where I've done well, I only feel like that I should have done 2 or 3 times better. That like I really did not take full advantage of it, that I could have pressed it, that I could have, I always feel like that I'm holding back at the wrong time. Anyways. Oh, okay. So tomorrow is their last day of the session. So they will be releasing the ruling on student loans tomorrow. That's going to be so interesting. Because I really don't think the executive branch has the authority to do that. But I also am not sure that they're standing for it. So how does the Supreme Court work that one out? It's going to be interesting, to say the least. Let's see what r/law has to say. Should have been a lawyer, I guess. Nah, I shouldn't have been a lawyer. I would probably hate being a lawyer. Affirmative action is gone. It's the title of their thread. I feel like legacy status should be banned too. I agree, to be honest with you. I don't like legacy status at all. Since it is from a school that used to discriminate by race, then legacy status carries that discrimination forward. That'd be a fun case, but it'd never make it to SCOTUS, in my opinion. Yeah, they're probably right. Reddit's probably right on that one. I don't think that they would ever rule on that one. Universities are going to have to get around this by placing more emphasis on income and wealth factors. Sure. Or like they could just use zip codes. They could, yeah. They could say, we want to have number of applicants roughly in line with the population of that individual zip code. Or something like that. Some of these comments are just so toxic. Can't even read them. Well, it looks to me like 03 is the best I'm going to get there, so I'm just going to take it. Like this, a horrifying ruling by a court full of sociopaths. Apparently, so I was looking at this. I was like, well, it seems fairly balanced now. It sounds like the liberal commentators, I bet, are gonna just flip their lid, and like all of the stories on Hot Air and so forth tomorrow are going to be funny stories about how the ridiculous reactions from on the left from this. But I think that the majority of people will say that this is a good thing. It was a good decision, rather. Virgin Galactic launches first commercial crew, marking new era in space tourism. Let's see if they noticed something about this move in the markets that I've missed. I can't believe they ran away from that order like that. A bizarre surge in exports, which came out of nowhere, sent Q1 GDP jumping to 2% this morning in its third look, and that is very much not what the market was looking for. Rate hike expectations soared, with markets now pricing in a 50% or so chance of 2 more rate hikes by year end. Equities swung wildly as rotation back to value from growth, small caps outperforming NASDAQ start. Gold was pummeled down near 1900, another lower high and lower low. Treasury yields soared with the short end underperforming, which sparked a serious flattening in the curve, deeper inversion, erasing almost all of the Silicon Valley Bank's steepening. Finally, the dollar rallied on the hawkish reaction in rates. Nomura's Charlie McGilligot asked yesterday, reflecting on the equity market melt-up, so what would it take to blow this thing out? His answer may be well worth paying attention to this morning, just spitballing. Perhaps what is required, in parentheses, easier said than done, is a proper correlation 1 event, in quotation marks, where the current dispersion wave reverses, especially if grosses keep growing, potentially requiring some sort of AI crunch from the long side. Earnings expectations mania overshoots reality. Seems too early for that just yet. Or maybe from the short side, where U.S. economic data does indeed see that aforementioned animal spirits trade and actually reaccelerates to such an extent that markets either begin adding in a fresh terminal rate, or where heavily short economically sensitives begin trading early cycle and get grabbed into / painfully squeezed. No one was expecting that kind of animal spirits growth, and the Fed can't stand for that. I do kind of feel like, this came back to like, okay, in equities, this seems bad because you're going to get higher rates, but it's good because the next earnings are probably going to improve. So that seems like something that you sell at some point, but when? I'm a little bit shocked at how tight the S&P 500 has been since the open in this first hour of trade. I'm a little bit shocked. Well, the market's kind of doing everybody's favorite setup right now in the treasuries, isn't it? Right? 0.5 is the critical level. So they, oh, actually, it was way further back here, wasn't it? It was right here. They pushed through it. Higher high. Probably it would want to get up to here. So probably the play is comes back to here and then to here. It'd come back to here and bounce higher. That would be the play, but I don't think that that's actually what's going to happen. I think that what's actually going to happen is they may come back up to here, but it's probably just going to die out in here. Probably just going to die out in this range somewhere. So I could probably keep this order at 03, but we'll see. Doesn't matter. I'll leave it on. I'll leave it on. Sorry, it was not showing any of that. There's the drawing before I clear it. I think it probably just stays there. You know what else? What are deltas saying here? Deltas say it's kind of flattening out. Because you could buy strangles or something. I was thinking about if it dies down here, that means you don't take a trade off of it, right? But it could settle, could quote unquote settle. So then, you know, you could buy its strangles. But assuming that certain numbers were all correct and all that sort of thing. Assuming the price is right, rather. Well, guys, tomorrow's going to be an interesting day because we get that PCE number. I have no clue what that's going to be. So what are the estimates? Core PCE price index, previous reading of spot 4 month over month, expected reading of spot 3. Yeah, if they were like spot 4 or higher, and granted, this is not a number that there's a huge difference. I mean, it's happened before, and in fact, it happened like, what, 3 months ago? Which February? It did happen in February, but usually this one's not too far off. So, but that was in February. They were expecting it to be, what was this? They're expecting it to be spot 4, and it was spot 6. So, you know, it's totally possible here that they could think it's going to be spot 3 and ends up being spot 5 or 6. If that happens, this market would flip out. So you got that. And then you got the end of month flows, which all seemed to be in contradiction of what the recent trends have been. Like our estimates of what the end of month flows should be are all contradict the trend. So could be some interesting trading for the first little bit tomorrow. I'm still very, very sad that I didn't end up taking the trade. So what happened? Well, so when I first took the trade, where did I put my orders at, by the way? Because I did put some live orders out. It was at 377. Oh, really? So I could have bought into 378, but I said there's no way I'm going to cross a basis point to enter into the position. And it wasn't until we were at 8 that things started to normalize. And then I was like, well, there could be a pullback or something like that. So I passed on it so many times, I was just being way too cautious. And again, that was because, and that could have been a $50, $60 trade, right? All because it just did not dawn on me the significance of that data point. So can't catch them all, I guess, but I still kind of feel, how do I put it? Like, feel like I failed you guys today. But it's okay. We didn't lose money. I mean, we did on Sim, but we didn't lose real money, so we're fine. We're still having on the real account a really, really great on a really, really great win streak, and we get to maintain it. So hey, it's okay. And probably there's going to continue to be reasonable opportunity. I mean, like, so far this summer, I mean, it's definitely a summer, and the volatility at points definitely like dies down, but there's been pretty good trade this summer so far, hasn't there? So, and where rates go from here, it gets real interesting, because I've never seen anything like this where like the market seems so sure, or at least the market pricing seems so certain that the Federal Reserve is going to start reducing interest rates, and then they end up being wrong and get smashed lower, you know? So this is going to be a wild ride, especially if we start getting to, oh yeah, 150 basis points before the end of the year isn't enough, and that sort of a thing. And I still think there's this possibility that we do have a recession, and it just comes on really quick, and so they do end up flipping, and the whole market like flips on its head within a week. That might not happen until after Labor Day, though. Well, we only got about 2 minutes left, but I'm just going to come back here and check out if there are any good comments I missed. Doesn't look like it. Cat turd. Those poor communists are now going to have to admit people based on hard work and accomplishments. There sure are a lot of people commenting on the Supreme Court decision today. But like, that's the thing is it seems to me like the court does have a little bit of a flair for like the drama. Like they know how to play it up so that the most significant decisions are at the very end. So what is the actual decision if the student loan thing is tomorrow? Find out next time at 10 o'clock Eastern Time on Capitalism. That almost makes me want to make TikToks again, but I don't think I will. See you guys tomorrow. Stay excellent.